My name is Jullien Gordon, and I'm here to express my position of disappointment and immediate recommendations for the Tulsa Real Estate Fund. I prayed long and hard about doing this and doing it publicly, and I realized that I'm the most qualified and perhaps the only person who could do it due to 1, being the lead investor in the Tulsa Real Estate Fund, 2, a fellow developer, 3, a peer to Jay Morrison in the real estate education industry, and 4, a friend offline. Scripture says, go to your brother directly in private, and I've attempted to do so through text messages. I've requested a meeting since July 31st, and no commitment has been made. Of course, I finally got a call from him 1 hour after last night's Instagram post announcing this speech. But I was in the middle of teaching a class, so I could not answer. Even if I talked to Jay, I would still have to share what I see with the 15,000 other investors in the fund. This is simply an accountability call. People have asked, will Jay be there? The truth is, this speech is not primarily for Jay. It is for the 15,000 investors in the fund. If there was a way for me to only gather and speak to the 15,000 without going public on social media, I would have done that. But there isn't any way that I can connect with them but to go broad and cast a wide net. Much of this speech, Jay already knows, and from our text messages dating back from July 27th. It's nothing new to him. He knows my stance. Without a board of directors, I, as an individual investor, have no other way to hold him accountable or influence the direction of the fund. Even if I do meet with him privately, this is a publicly raised fund and therefore justifies public critique. Why now? I personally waited this long because I believed in group economics, I believed in my brother Jay Morrison, I believed in TREF's mission, and I believed in God. I wanted to give the fund a chance despite its rocky start. As a fellow real estate developer, I know that real estate funds need 3 to 5 years to bear fruit in terms of dividends, monthly cash flows, and appreciation. The Tulsa Real Estate Fund started in June of 2018, so we have reached the 5-year mark. My capital is patient. However, the Form 1K filed recently on June 21st, 2023 for the period ending December 31st, 2021 was alarming. It showed that TREF Titanic is likely on the verge of sinking into bankruptcy unless it gets bailed out by debt or additional investment, with the fund only having $772,372 in cash left of the original $11.5 million invested. That filing was over 18 months ago, so it may already be too late for TREF investors to recoup anything. I've already written off my $40,000 investment to zero. Based on my research, it appears that the only person who has truly benefited from TREF is Jay Morrison himself. In Tulsa, Oklahoma, the real Black Wall Street, we had white outsiders burn down the neighborhood and its assets in 1921. Today, we are in 2023. And our very own people are burning through Tulsa Real Estate Fund's money from within. As not the leader in this financial literacy revolution, I can't just sit around and watch that happen. We, as a collective, are afraid of accountability because we know that if I call someone out on their stuff, they or someone else is going to call me out on my stuff that's in the darkness. Nobody is perfect. So we tend to give others' imperfections a pass. Nothing changes like that. Instead, we need a new standard of righteousness where I push you to be and do your best, knowing that you're going to push back, pushing me to be and do my best. The buddy-buddy culture we have amongst us leaders, especially in the financial literacy space, where we are afraid to lovingly call out our brothers and sisters when they publicly say or do something wrong because we don't want to ruffle any feathers, is spineless. I'm not turning a blind eye just because your Instagram following is bigger than mine, and I'm afraid you won't invite me to your party or put me on your podcast or ruin our potential or future business partnerships. We can't operate like that anymore. We can care for each other and correct each other at the same time. The two are not mutually exclusive. In fact, if I don't correct you, I likely don't really care about you because I'm allowing you to dig your own grave. And to the community, the people, everything is not a beef, nor is everything done in the spirit of hate. Please don't fuel that flame. Leaders make mistakes, but they don't need to be canceled. They need to be corrected and given the chance to make things right with action, not just words. I'm fully aware that one day, I myself as a leader may make a bad decision that you all disagree with. And I pray that you help me see it and can help me repent, which means to change my mind and change my ways. The purpose of this speech is fourfold. One, I want to simplify how the fund is doing to the 15,000 investors who may not be as sophisticated based on the one essay form that I don't personally believe that Jay Morrison has been 100% transparent about on the monthly TREF Talks Zoom calls, especially given that the base of investors are unsophisticated and non-accredited. By unsophisticated, I do not mean that you are dumb, okay? Unsophisticated is a term used for investors who are new to this type of investment. A sophisticated investor is somebody who's made equity-based investments like this before. So this is not a statement of level of knowledge or ignorance. It is the terms used in the financial world. I'm so happy that you made this investment in this way. I'm unhappy about how the investment is performing. Okay, just wanted to clear that up. And then accredited investors are people who have met certain financial standards. The second reason is to provide recommendations for the fund's future to the leadership team, including drastic cost cutting or a complete liquidation of all assets. 3, request data from the fund's leadership team for the investors that is not disclosed in the SEC filings. 4, invite Jay Morrison to a public forum to share his decisions regarding my recommendations and answer any questions from TREF investors fielded by me, a fellow developer and sophisticated investor, where he doesn't get to dictate the narrative or choose the questions. At this time, I am not aware of any board of directors to hold the CEO, Jay Morrison, accountable, so I am my brother's keeper. I'm concerned about Jay Morrison, but more importantly, I'm concerned about the 15,000 investors in the fund. Jay Morrison is fine given the management fees he has taken. The 15,000 investors probably don't have the same amount of money in their bank accounts. Please share this video or tag anyone you know who invested in the fund so that they are aware of what is going on. I ask that you refrain from shaming them for believing in group economics or saying things like, "I told you so." Instead, please encourage them and help them recover from their losses. Many of the smaller investors have had problems with the fund for a while, but no platform to compete with the size of Jay Morrison's platform. They had to resort to YouTube videos, Instagram posts, tweets, and deleted comments on Jay Morrison's social media pages. So I'm sure they feel silenced and helpless. While Jay says the redemption requests are below 10%, that is likely because people are unaware of how the fund is actually doing and don't know how the redemption request process works, which I will share later. The Tulsa Real Estate Fund moved from a partnership structure where it had to produce an annual K-1 for each investor, which revealed the decline in investors' investment with a specific number on the document either emailed or sent via mail. So if you made a $5,000 investment, when you got your K-1 the following year, you would see that it went to $3,500. So you would see that you were losing money, okay? As a fellow developer, I know that K-1s for 15,000 investors are expensive to produce every year. So it was actually a smart move and a smart switch if that was the primary reason for the switch in structure. But now, as a corporation, the fund is able to hide the misuse of money and investors' current investment value from unsophisticated investors. In short, everyone, the $11.5 million raised by the Tulsa Real Estate Fund is now only worth $4.3 million, $4,343,928. $4,343,928 as of December 31st, 2001. So it may be even less now. That's a 64% loss or $7.4 million gone. I can lose my $40,000 investment and it will not affect me one bit. But I know many individuals and families gave their last in the name of group economics and generational wealth to be part of this investment group and can't bear that loss. As of last week, I have submitted my redemption request, but the fund's policies don't have to honor it. Similar to the way Standard & Poor's evaluates and grades stocks, it is a symbolic gesture that I am withdrawing my confidence in the leadership of the TREF team and the future of the fund to be able to execute on the vision sold to the people. For those who think white people don't do this publicly like this, that is because they do it through mass media, not social media. For instance, the Jim Cramer show, which calls out stocks for non-performance, or organizations like Standard & Poor's, also known as the S&P, that rates companies' performances. They do it through institutions, not individuals. They do it through mass media, not social media. We don't have those. This is all we have. All we have is each other. The fund strategy. The name Tulsa Real Estate Fund clearly suggests that the fund would invest in real estate. As a fellow fund manager of the Buyback Baton Rouge Fund, we invested over 80% of the monies received from our $3 million raise into actual real estate. TREF only has $4,054,664 in real estate assets out of the $11.5 million raised, which is only 35% of the fund. According to Jay, in our text messages, he said, "Our fund wasn't solely a development fund as yours and others may have been. It was a funding source for the urban community owned by the people. That is not how the fund was marketed." According to the website, only 88 properties have been underwritten and 25 have been funded in 5 years. That's a one hot album every 10-year average, and that is lame. That is an extremely low deal flow during a time where interest rates were at an all-time low and real estate sales in terms of quantity were at an all-time high. I requested a list of what TREF has funded and what it has owned below. It is unclear how much real estate TREF actually owns due to various deal structures like partnerships, mortgages due, and properties under development. With $11.5 million raised after 5 years starting in June of 2018, we should have a leveraged real estate portfolio worth $30 million or more. It appears that the fund only owns some smaller properties and the Legacy Center, which it acquired for $2.1 million and spent over $500,000 to rehab. We are requesting a detailed list of the assets TREF owns so that we can make a clear distinction between those and the real estate developments TREF funded. For the years ending December 31st, 2021 and 2020, the company had a net loss of approximately $2.7 million and $1.9 million respectively. According to the fund's accounting firm, these factors raise substantial doubts about the company's ability to continue as a going concern. Going concern means stay open and operating within 1 year from the issuance date of this filing, which was 6/21/2023. The company's ability to continue as a going concern is dependent on its ability to raise the required additional capital or debt financing to meet short and long-term operation requirements. That is from the accounting firm on the SEC documents. I do not encourage anyone to invest more in this sinking ship. I repeat, I do not encourage anyone to invest more in this sinking ship. Based on the one essay submitted to the SEC, more money has gone to employees, including Jay's wife, Ms. Ernestine Morrison, Chief Communications Director, than to developers and actual real estate developments. I'm going to repeat that. More money has gone to employees than actual developers and real estate developments. This is a real estate development fund, not a personal development fund, but that's all that's happening. It is unclear what value these team members have been bringing. Either you bring deals, developers, investors, or tenants to the table. Nothing else matters. I don't think most of the team works full time for the TREF Fund, including Jay Morrison himself, and the compensation should be adjusted based on the amount of time spent working on the business. We are requesting documentation of annual pay since 2018 for all employees. Here's the leadership team from the website. Jay Morrison, Chief Executive Officer. Janetta G. Payne, Esquire, President. Mason Mallory, CFA, CPA, Treasurer. Ernestine Johnson, A.K. Morrison, Chief Communications Officer. Tosin Aduwale, VP of Business Development. And Ty Bruton, Director of Finance and Administration. The $250,000 that Jay Morrison has been taking in that's just the baseline, that he's been taking in management fees each year is warranted. I want to be very clear about that. The initial subscription agreement that all investors signed called for a 5.5% management fee plus 50% of profits. Typically, management fees for real estate funds are anywhere between 2 and 4%, not 5.5%. But every investor actually signed and agreed to that. So I want to be clear that Jay Morrison has not done anything illegal that I am aware of. I'll repeat, Jay Morrison has not done anything illegal that I'm aware of. This speech is a question of leadership ability and morality. From a leadership standpoint, the fund has made very little progress in 5 years, depleting over 2/3 of the fund's assets with avalanching cost. From a moral standpoint, to continue to take management fees and refinance the Legacy Center at this point to free up more cash to take more management fees is morally questionable. To date, the fund has taken $1.56 million in management fees with nothing to show for it except for the Legacy Center. The issues. Issue number 1, too many people, not enough real estate. The Tulsa Real Estate Fund's initial goal was to raise $50 million. It raised about $11.5 million, or 23% of that. But its cost structure remained as if it was still a $50 million fund. With $11.5 million raised for a real estate fund, $8 to $10 million should have gone into actual real estate deals, with $1.5 million set aside for the management fee for 3 years to cover Jay and 1 to 2 other people at $550,000 per year, or 5.5%. As of December 31st, 2021, TREF had 8 full-time employees and utilized approximately 9 independent contractors and advisors to provide selected services to supplement its employee base. You do not need 8 employees for a fund of this size. The team is too top-heavy for a fund this size, and they have not delivered deals or assets. Jay and 1 to 2 other people could have carried this load until assets were acquired and stabilized with the agreed upon 5.5% management fee. There is no way that general, admin, and marketing should have jumped from $257,000 in 2018 to $765,000 in 2019 to $1.75 million in 2020 to $2.04 million in 2021. That's excluding the management fee. That's $4.8 million to people and providers instead of actual real estate deals. The Buyback Baton Rouge Fund's cost structure is way lower in terms of GMA and a lot higher in terms of percentage of capital that went into real estate. $505,000 in revenue for the Tulsa Real Estate Fund in 2021 with $2.3 million in costs does not make sense from a business perspective. Any real CEO can see that. This shows that no financial controls were in place despite having a treasurer and director of finance and administration. In other words, this is pure negligence, family. Issue number 2, cash poor. The fund only had $772,000 in cash left to invest as of December 31st, 2021. But given its burn rate, the fund would likely be bankrupt in the next 12 to 18 months, and we are past the 18-month mark as of now. Again, that was December 31st, 2021. We are now in August of 2023. So that is actually 20 months. So the fund is likely very close to bankrupt at this moment in time. The recent refinance of the crown jewel of the fund, the Legacy Center or the Black House, which was bought in cash and rehabbed in cash, scares me. In real estate, we only refinance to get money out of a building to buy more real estate, not to pay employees or cover operations. With the refinance and the new cash in hand, Jay Morrison will be able to take more management fees, which you can't do when the equity is in the actual walls of the building, protected. There are also questions about the change in ownership on the Legacy Center during the refinance on the deed that people want to know answers to. Issue number 3, 5 years of no accountability. A fund of this size and with this mission should have a board of directors. It is a little late now. To my knowledge, Jay Morrison has no accountability in terms of the fund's investments with the exception of his team. The monthly TREF Talk Zoom calls are good, but they are one-way conversations, meaning that Jay Morrison controls the conversation. They allow for questions which Jay can cherry pick, but no chat. So the investors cannot connect with one another to discuss the direction and decision-making of the fund. Issue number 4, blurred lines. There needs to be more distinction between the fund and Jay Morrison's other businesses. The lines are blurred. From a leasing standpoint, like McDonald's, the fund should be the landlord to its franchisees or tenants, even if the CEO of both companies is the same, which is Jay Morrison. The fund should be leasing the Legacy Center profitably to the operator or primary tenant, which includes some of Jay's businesses, instead of trying to master the event space and media business models. The operator's losses are being passed down to the people. We bought the building, not a media company, co-working space, or event space. TREF has also paid Jay Morrison Academy $115,000 for intra-company marketing services. I follow Jay Morrison online, and I have yet to see any major marketing campaign to developers to fill the deal pipeline that has only led to 25 deals being funded in 5 years. All I see on his timeline is credit, 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 which only supports the Jay Morrison Academy and not the fund. TREF has refinanced properties owned by Jay Morrison's company. The 1-year loan at 8% for 862 and 875 Parsons Street in Atlanta, Georgia, originated on July 15th, 2019, was still not paid as of December 31st, 2020, and had a $537,000 balance. So somehow Jay is getting wiggle room in terms of money that he's borrowing from the fund, right, on loans. So he's borrowing from the fund himself at extremely low interest rates. And I don't know if there's been a penalty applied to the fact that it was a 1-year loan, yet it's still outstanding. TREF leases space to Jay Morrison Academy for $3,763 per month. I'm unable to verify if that is market rate rent for the space used. I'm sure that does not cover the new mortgage on the building. I have fourplexes that generate more rental revenue than that. These blurred lines seem to primarily benefit Jay Morrison's interests and not the TREF investors. It seems as though TREF has become a petty cash account for Jay to buy his office, his wife a studio, his new single-family home, and pay his friends on the backs of the people. Issue number 5, weak path forward. On the most recent TREF Talk for investors, Jay Morrison compares TREF's early year losses to technology companies like Facebook, saying that they take years to get to profitability. Technology's methodology does not apply to a real estate fund. In real estate, you win on the buy, and Jay should know that. The issue is that the fund hasn't bought much beyond the Legacy Center. $8 million could have been leveraged into at least a $30 million real estate portfolio over 5 years. The transactional funding seems to be the only way out. Otherwise, the fund is almost bankrupt within 12 months. We can't eat another year of $1 million plus losses or GMA expenses. With transactional funding, $1 million would have to be loaned at 26% every 90 days for 8 consecutive quarters or 2 years to recoup the $7.4 million loss in value just to get us back to break even, assuming that expenses, which is primarily people, are cut drastically. To put that into context, Warren Buffett multiplies money at around 18% per year. So the transactional funding business is not likely to hit a 26% return quarterly. My efforts. I hate offering feedback or criticism without seeking to be part of the solution. As after seeing the fund struggle coming out of COVID, I brought the fund 2 major deals. One, I brought Chris Senegal's deal in Houston to Jay Morrison, and he declined it, saying that Chris and his team could not meet the TREF terms, our terms. I then personally filled the gap and became the lead investor in Chris's fund. Chris just cashed me out and 30 other investors out of that deal with a 20% return over 2 years as of July 2023. The second deal, I brought Booker T. Washington's Techie Home deal to Jay Morrison in January of 2023. Again, Jay said that Booker T and Techie Homes could not meet our terms. Again, I then filled the gap with my own personal money and raised additional money totaling $4 million from a few hundred investors to fill the gap. Chris Senegal and Booker T. Washington fit the exact mission of the Tulsa Real Estate Fund and are 2 of the best developers in the South. I personally was and am the lead investor in both of those deals. I have single-handedly become the bank that TREF was supposed to be, with less capital to invest and 0 expenses related to these transactions. How is that so? How, Sway? I believe that the reason that the terms were not favorable in Jay Morrison's eyes is because the cash would be tied up in actual real estate deals, and that would not leave enough cash to siphon off for his own pockets in terms of management fees annually until the fund is actually bankrupt. I've also rented the Legacy Center once for an event to try to circulate money into that particular business. Now, beyond bringing sweet deals to the table, I don't know how else to help the fund from a distance. Jay Morrison. Jay Morrison has been through a lot in the past 5 years personally that has detracted and distracted from his ability to focus on the fund. From a professional standpoint, he had to deal with the SEC and FBI investigations of the fund that ended with no findings. He also had to deal with COVID, which disrupted the original business model for the Legacy Center. From a personal standpoint, he had to deal with various online beefs due to bad business dealings in the past. He had to deal with the birth of his daughter, new to fatherhood, and her brain surgeries, which he shared publicly. And he also had to deal with his own health issues, which he also shared publicly. All of these are valid, unexpected challenges. Most of them weren't intentionally brought about by the choices and actions of Jay Morrison himself. Nonetheless, the people of the People's Fund should not have to pay for what's going on in the leader's personal life. Even if these issues accounted for half of the fund's poor performance, the other half must be attributed to mismanagement of funds. It is clear that upon the fund's failure in bankruptcy, Jay Morrison is positioning his exit strategy into ministry, which is a safe play. There, he can ask for instant forgiveness by the black church, which has forgiven other drug dealers and pimps. We know how the black church leaders have robbed people financially in the same way that the Tulsa Real Estate Fund is robbing investors by not acting in their best interest. A few years back, I met with Jay Morrison in person at the Legacy Center, and I told him that the way to clear his name publicly, all these people he claims are talking about him, and shut up all the haters, was to deliver on TREF's promise. I tried to do this in private, but he was non-responsive. He didn't adhere to feedback or wisdom. He had to come back wearing the 4-5 Jordan jersey and show the people that he was the king of real estate that he claims he is by producing real estate results. However, the fund is in danger of being eliminated from the playoffs. In fact, it hasn't even made the postseason. I think he thinks his answer is to raise more money. That is not the answer. Scripture says, whoever can be trusted with very little can also be trusted with much. And whoever is dishonest with very little will also be dishonest with much. That's Luke 16:10. Jay has not earned the right to ask the people for more money. You blew the bag, big homie. Instead of focusing on turning the fund around, his social media focus is teaching people credit plays for his personal gain in the Jay Morrison Academy. In order for credit to be leveraged, everybody, I want you to know, you have to earn real money at some point, and I don't know if he actually knows how to do that. We don't need a new credit game show, Jay. We need a return on our investment for TREF. Jay, we honor you for being a pioneer in the online financial education space, the corner classes, the Big Brothers Anonymous program, the grassroots organizing around Freddie Gray, Houston's, and other critical events. You were like the Jesse Jackson or Al Sharpton of our day. We give you your flowers for that, but at the same time, you are failing as a financial freedom fighter. You claim that others shot arrows at your back because you were so ahead of your time and ahead of the game, but many of them seem to say that you shot at them first. I, brother, approached you face to face, unarmed and in peace, and I'm still at peace as I speak this word. You ignored lovingly, brotherly correction. I'm sorry, but monthly Big Brothers Anonymous meetings at the Black House with hundreds of black boys will not make up for the mismanagement of the funds of 15,000 families. In this case, the bad outweighs the good. The only thing I have in my hand that can be perceived as a weapon against you is the June 2023 SEC filing, which was 18 months late. The ability to interpret that filing for the people and the courage to speak up about it. If you have some top secret strategy or home run play to save the fund, please, now is the time to tell all 15,000 investors what it is, because it looks like the fund is about to go bankrupt. If you do that, I'll be happy to take this video down and do a public apology to you. I'm not sure that you ever had the intention to grow the fund and make it profitable beyond just milking it for management fees. That deeply saddens me. And your actions and the evidence that I see show that that actually might be true. How do you keep drawing management fees from an $11.5 million fund, family? Let me explain it to you. Here's how you do it. You raise an $11.5 million fund. You actually don't put the money into any assets so that you can draw the cash out as management fees. If it's in the assets, you can't draw any cash out as management fees. So go get one asset, make that your flagship asset, keep the fund cash heavy, and keep drawing your management fees from that. That's exactly what's happening. But only Jay Morrison knows if his intention was pure. He was so focused on raising more money than Marcus Garvey did for UNIA and the Black Star Line that once he achieved that, he lost sight of the true vision and the work that would follow. In his own words, he would say on Instagram, "Outwork the work, fool." Well, I'm sharing your words back to you, brother. It's time to put in the work, and it might be too late. He took our investment in our community as income, not as an investment, as income for himself, his wife, his friends, aka employees, and his other companies. We have to be careful who we model ourselves after, because history repeats itself. This is 100 years later, and today we have TREF and the Black House instead of Marcus Garvey's UNIA and the Black Star Line boat. You see the connection and the correlation? The Black Star Line, just so you know, failed miserably, and Garvey was accused of fraud around selling stocks in a failing company. Sounds very similar to what's going on right now. If Jay cannot prove that he has done everything in his power to grow the Tulsa Real Estate Fund, this is one of the biggest financial scams pulled off on black people by black people in history. You may have one record of raising more money than Marcus Garvey, but you do not want the negative record of actually being the biggest scammer in our community. This is the opposite of what O.W. Gurley, founder of the Greenwood District in Tulsa, Oklahoma, the real Black Wall Street, intended. It would be a disgrace to the black community at large, the entire diaspora, our ancestors, and future generations to come. My recommendations. Option 1, the cost cutter. Cut costs drastically by firing all staff except one person dedicated to the transactional funding business. Defer any more management fees until the fund reaches $10 million in net worth again. Answer outstanding questions and share the documents requested publicly. Triple down on the transactional funding business with any cash left, even if that $772,000 even exists. With the recent refinance of the Black House, there should be cash in the account, but it is in the form of debt, really. Option number 2, the liquidation. Cease all operations and release all staff immediately. Do not take any more management fees from the fund or seek to recoup deferred fees. Liquidate any assets, including the Legacy Center, immediately and return as much cash as possible back to investors. Hopefully 25 to 30% that's left. Additional questions I have on behalf of the 15,000 investors. You said that compliance during the SEC investigation ate up $2 million of the fund. You said that in TREF Talks. You said that in other instances. We would like to see proof of how much was spent on compliance during the SEC investigation, since the 1SA does not itemize vendors and instead uses general categories. 2, we would like to see a chart of each employee over the past 5 years, their title, their job description, their salary, benefits, and performance reviews by year. 3, we would like to see by address the assets the fund currently holds, their purchase price, their rehab budget, the business model, the current value, the current debt, the top line money cash flow from rents and other activities, and monthly expenses by line item, and the monthly net income. 4, we would like to see leases and proof of payment between TREF and the Jay Morrison's businesses and any other businesses which are renting or using the space at the Legacy Center to make sure that those businesses are being charged market rate rent. 5, we would like to see a spreadsheet of all the real estate developers that have submitted requests for transactional funding, the date they submitted, their names, the amounts requested, the decision and decision date, the terms, and the return for TREF and the current status of that transaction. Number 6, since the most recent 1K was for the year ending December 31st, 2021, we would like to know the cash position of the fund today. Please share the tax return or SEC filing for the year ending December 31st, 2022 as soon as possible. If those are not prepared, share the QuickBooks P&L or main bank account balance. In conclusion, I still believe in group economics. I'm the lead investor in several black real estate funds and have raised money from hundreds of non-accredited investors. However, I do not believe in the Tulsa Real Estate Fund with its current team or business model. My challenge to the community going forward, including myself, is to get better at doing due diligence on the founder, the business model, the industry, financials, and the legal documents. Don't get caught up in lifestyle marketing, hype, good branding, or FOMO, which is fear of missing out. All of my other real estate investments have and are succeeding. TREF is the only one in this position. But just like in dating, I saw the red flags and ignored them. Yes, I take responsibility. Someone being a first timer at something like Jay Morrison was in this instance is not a red flag. Pioneers are important and the only way we move the culture forward. However, his 2016 personal bankruptcy, online beefs, jail time, and drug dealing were red flags. His reputation preceded him. I've not heard one person talk good about Jay except those who eat from him or with him. Everyone else can't be the problem, bro. You are the common denominator. I wanted to believe that Jay Morrison could fit the Jay-Z archetype of going from the hood to good at scale. Unfortunately, I was wrong. I don't blame Jay for making my $40,000 investment. I blame myself and my own discernment. I take full responsibility for my decision to invest in the fund, period. That was my bad, and I regret it. However, I do hold Jay Morrison accountable for the poor performance of my investment once I made it. For the other TREF investors, I encourage you to do two things. One, send an email to info@tulsarealestatefund.com expressing your concerns in support of this video and my recommendations above. Be sure to CC Jullien at thefreedomschool.com. That's Jullien at thefreedomschool.com, so I can keep track of how many emails are sent in. If you have questions, TREF uses a customer support platform called Zendesk, and the URL is https:// Tulsa Real Estate Fund Zendesk.com or .com. The second thing I encourage you to do, initiate your redemption request by completing the form at the link below. It's a JOT form and it has a pretty ugly URL, so I won't be able to communicate it to you verbally, but look below in the comments or the description and you'll find that JOT form to submit your redemption request. Again, redemptions are unlikely to be fulfilled given the financial state of the fund, but it is another way for our voice to be heard with regards to how our hard-earned money is being invested or not being invested. Okay? And to Jay Morrison, brother, I tried to come to you directly and in private, but you kicked the can. I had no other choice. There is no love lost, and I do not hate you. This is just accountability from little bro to big bro. You are a public figure that raised a public fund, so public conversations are warranted. Quoting you, the fund won't fail. There's so much more you need to know and need to hear it from the leadership here other than me. It may not change your perspective, but will add color. We won't fail though. This I know. It's too blessed, and God will underwrite his work, and despite what's being portrayed about me, he knows my heart and the sacrifices and genuine efforts I've made to lead his people. I know what I know. Brother, this purely spiritual answer is not acceptable. We know that you've given your life to God, and we know that this fund was inspired. It was inspired by power, divine power. It was clear. But once you actually receive that power, it seems like you have taken it for yourself. We don't need spiritual answers right now. We need financial answers and tangible action and accountability. It says faith without works is dead. And right now we don't see any work. If you are open to creating a Dropbox or Google Drive folder that for the public, if you are open to creating a Dropbox or Google Drive folder that the public can access with the documents and information requested, and also have a public discussion hosted by me, I'm happy to do that. Beyond that, everyone, I don't want to commit any more energy to this conversation unless Jay Morrison accepts my invite. It's pointless to talk about this to other people who actually do not control or influence the direction of the fund. I did this speech for the 15,000 other investors, not myself or Jay Morrison. I would be happy if this only got 15,000 views, and those 15,000 views came from the 15,000 investors. This was not about going viral. That's what matters most to me, and that's what's mattered most to me since the investors have no other way to organize themselves. There was no other way for me to reach the 15,000 investors except to cast this wide net and hope that they find this video. If you are not a TREF investor, please share this video with anyone you know who invested. For me, instead of pushing against what I don't want or like, I would rather invest my energy into what I'm creating and building with the multifamily movement, which is working and creating real regenerational wealth for families across the country. To date, we've helped over 800 people close on over $300 million worth of real estate, and we've done that in just 4 years, and the Tulsa Real Estate Fund has been open for 5. The only follow-up interview I'm taking regarding this is the one with Jay Morrison himself. This is not a publicity stunt or a beef. It is a fact-based public accountability. King Jay and the fund's leadership team have the ability to ignore this video, my recommendations, my invitation, the emails from investors, and their redemption requests. To that I say, real kings feed their people. They don't take food off of their people's table. Real kings eat last, not first, like you're doing with the management fees. Real kings take responsibility for their action or inaction. They don't blame anyone outside of themselves. And real kings don't text threats when someone holds them accountable with facts. Hebrews 12:11 states, "For the moment all discipline seems painful rather than pleasant, but later it yields the peaceful fruit of righteousness to those who have been trained by it." This is discipline and accountability, and I hope that you adhere to it. The betrayal, Jay, is not of me to you, little brother to big brother. The betrayal is you to the people, family. If we the people can't hold you accountable, we know that God will. For those of us afraid of giving or receiving accountability or correction, I realized through this inner process that righteousness is not just me being good to others. It is also me stopping others from doing bad to good people. I had to do this for the people, since the People's Fund is clearly not working on their behalf. I see so many TREF investors in the comments on yesterday's post say they didn't know. If you were mad, Jay, which your last text last night suggests, all I've done is simply simplify and highlight numbers from the public SEC filing and use my platform to get this information to the 15,000 investors. What's wrong with that? What's there to be mad about regarding that? Would you rather them not know? Your interpretation of the company's status on the last TREF talk danced around the major issues and did not give any indication that the fund was near bankruptcy. So I decided to offer an unbiased alternative interpretation. I believe that is a fair thing to do. To the other TREF investors, learn from this loss and then earn what you lost back 10 times over. While I did not directly encourage anyone to invest in the fund, I sincerely apologize if anyone saw me celebrate my investment and decided to invest because they trusted me. I wish all of the TREF investors and everyone else watching this wellness and wealth. Thank you, thank you, thank you.